Hey, what's up, everybody? This is Justin Daniel Finance. I am Justin Daniel, and thank you for tuning in. Today, we need to talk about Paysafe because I recently revealed that Paysafe is my largest holding, one of my favorite stocks, if not my favorite stocks in my portfolio. And if you didn't see that video, you can go directly to the channel, Justin Daniel Finance. You can look for it. It was an overview about the company and why, in general, I like the company and the stock so much and why I think it has a lot of growth potential. But today is not the greatest day because today was the earnings report and the stock is not doing good. At one point, it was down nearly 20%. At the time of this filming, I think that it's around 14%. It's the morning here on the West Coast, and I may not be able to drop this video until later tonight or tomorrow, so I'm not quite sure how it's going to close, but it's not looking good. Either way, it's double digits down. It's in the red. So I'm going to go over some of the reasons why. Going to take a look at some of the numbers and the earnings, what I think that it means. Going to discuss what I plan to do. One thing I do want to say is, I'm a long-term investor in this company. So again, I don't worry about the short-term fluctuations as much. I want to, think more long-term about this company. If you do have conviction long-term, is it still the case that this is a great pick long-term? Does that mean that it's a buying opportunity, a chance to buy the dip? If you do have cash on the sidelines, if you do have some of that dry powder, do you want to buy now? So I do have to say one other thing. My second biggest holding is Palantir. They also released earnings today, and it is actually in the green pretty nicely. I think almost up at double digits in the green. So it's kind of offsetting for me personally in my portfolio, which is good to see. This video is about Paysafe. So if you want to go see that about Palantir, I'm going to try to drop that soon as well, if that's something you're interested in. But Paysafe, if you were to watch my original video, I kind of highlighted in the overview, I took a look at a couple of other fintech companies. I gave specific examples of PayPal and of Square just to show, look, here's what companies in this space can do over a 5-year horizon. So I looked at the 5-year chart and showed that PayPal had basically, done a 7x from that chart, and Square came through with a massive 25x in that 5-year chart. And so I posed the question, can Paysafe do the same with all this potential in these verticals that they're in, online betting, sports betting, iGaming, crypto. And that's what I was kind of thinking about, why there's so much room and why they're in such a great space. So what's going on today? First of all, though, with those examples that I mentioned about PayPal and Square, what if we were to zoom out a little bit? So if we were to zoom out on Square and we weren't taking that long-term approach, you can see that there's times where there were some substantial declines in the stock price. So take a look at this. In September of 2018, it was trading at nearly $100 per share. You can see here very close to 100. And just 3 months later in December, it was trading at just over 50. So if you were to look at just in that time frame, from September to December 2018, within 3 months' time, it lost nearly 50%. And if you were sitting there, what would you think? Would you be panicked? Would you sell? If you were someone who had conviction in the technology and the future of a company like Square, you could have really missed out if you would have panic sold and you saw, hey, it dropped, it's dropping, and maybe you see it drop 10%, 20%. At some point, you might just want to sell, and you'd miss at that point all of these gains that it ultimately had within a couple of years later. So that's the point that I'm making with something like Paysafe dropping, double digits. Is it the end of the world? Is it time to panic? Is it time to sell? Or on the other hand, is it a great company? We still have conviction. We still believe in a long-term growth, so it's a chance to buy more. We can also take a look at PayPal. And PayPal, as you can see here, is not quite as big of a dip, but if we were to look at this, well, it's not quite as drastic, but if you were to zoom in August, see here, within a matter of days, within less than a month, it had gone from over $200 or $204 per share, all the way down to $176 from August to September. So I'm showing, those, and look, that's not quite the 50% as Square, but look, that's still a double-digit drop at a time when the market was so hot and so many stocks were just going up, substantially at that time. This one was a double-digit drop. So again, you might say with something like that, hey, is this a stock I just need to sell, take my loss, cut my losses and run? Or would you say, hey, this is still a great company, potentially even a chance to buy here on this dip. And that's where I'm kind of coming from. Right now, it's been a bloody few weeks, months on the market for growth stocks. And this is true of a lot of stocks out there. A lot of stocks have really declined since mid-February. People are talking about rotations over to value or cyclicals. People are talking about, retail investors getting out into cryptos, looking to put their money there, and a lot of other reasons I'm not going to get into right now. I might get into on a different video, but this video I want to stay focused specifically on Paysafe. Right now, Paysafe is down 14.6% at this very moment, and that's not easy to stomach. It's not really easy to see that. I know a lot of other people out here watching this video feel the same way. You woke up and you saw that it's looking pretty bloody, and it's not easy to see that. I get it, especially when it's your largest holding like it is for me. You see that, and maybe you were hoping that there would be a big pop today when the earnings were released. Maybe there'd be something really good there that would make the stock just jump up today. That's what we would all certainly hope for. I personally wasn't super optimistic that today was going to be a huge catalyst for an upward spike, just because with what's going on with the growth stocks and everything right now, even an earnings beat in all regards can potentially still have a sell-off or at least a downward pressure. So it's just hard to gauge what's actually going to happen before the earnings. But regardless, it's not easy to see. Everyone out there, if you're feeling the pain today, I am feeling your pain, trust me. But I still think this is a great company. I'm actually going to buy more. Not advice for anyone out there. I always say I'm not a financial advisor. I'm just a CPA with an MBA in finance who loves the stock market and loves talking about it and making videos with my thoughts and opinions on it. So I'm going to jump into the numbers here. I'm going to take just a look at some of the key highlights of what came out in the earnings report. And before I jump into it, I just want to say to everyone out there, I really do appreciate you taking time to watch this video. Appreciate the support. I've gotten some positive comments from people out there, which I really greatly appreciate. I really do. Because again, this is a new channel and I'm just looking to grow it, want to continue to bring quality information about stocks that I'm interested in to everyone out there. So if you do feel the same, please go ahead and please drop a comment, please subscribe. That really helps the channel as I look to grow and get more and more out there into the YouTube algorithm. So with that said, let's take a look at some of the key highlights that came out in today's earnings report. All right, so we can see here that Paysafe beats on revenue, reaffirms 2021 outlook. And it says the Q1 net loss of $49.1 million compared to a net loss of $51.1 million in last quarter. Revenue of $377.4 million, which beats by $11.05 million. And that's good. Total payment volume of $27.7 billion, which increased 8% year over year. Now, me personally, I would like to see revenue keeping up with volume percentages, but this is good as well. And then their EBITDA, adjusted EBITDA, I should say, of $113.2 million is approximately flat. Now, they did strengthen the balance sheet with a debt repayment of $1.2 billion. I believe that was from the proceeds of the SPAC deal. But either way, to get the debt off the balance sheet, makes the balance sheet stronger, less of a liability, even though debt is not really expensive at the moment. That's good for the balance sheet. They said capitalizing on strong momentum in North American iGaming, including 66% revenue growth, product enhancements, and exciting launches. So we love to see that, the iGaming in North America. We know that they have a strong presence in Europe. We like to see it in North America. And as I said in my previous video, when more and more states legalize online gambling and sports betting, this is just such a clutch opportunity. So I like to see that. Now, they say they're expanding in emerging verticals across digital wallets, e-cash, and e-commerce, and talking about the launch of the cryptocurrency offering, the U.S. partnership with Coinbase. That's something I also covered on my first video, but that's exciting and that's great. And then they mentioned small to medium-sized businesses recovery in the U.S., which, it kind of applies to everybody, but for an online digital wallet, I don't know how that's quite as significant. Maybe it's more significant for the merchant processing aspect of their company. And then here we can see that the revenue growth of 5% year over year, we already mentioned that one. The result reflects growth across the eCash business more than offsets the lower revenue from the digital wallet business. Now, this part concerned me a little bit when I looked at the management's estimates versus the actuals, just because, it's great that the eCash kind of offset the losses and the digital wallet, but I always like to see when managements have a really solid grasp on their company and their forecasts are in line with actuals, is something that's great to see, but I'm not sweating that. What else? We see that the payment volume rose. We mentioned that. Adjusted EBITDA rose. Net loss of 49.1 million, with an EPS loss of 7 cents, which missed the analyst consensus of 2 cents. And I think that's where a lot of the concern came in. I mean, that's a pretty big miss, and we're talking about net loss here. So I think that's where it comes in. But for me, I think that, with the growing revenues, if they continue growing more and more, just because they missed the earnings per share on this one, it's not a huge red flag for me personally. But I think it's what's causing some of the sell-off, to be quite honest. But we did see that it generated 48.7 million in operating cash flow and held 1.6 billion in cash and equivalents. So I love that because, when you're generating cash flow, that's great. When I see companies that are burning through cash, and how long is their runway? Are they going to have to go back to the capital markets and raise more money? Are they going to have to raise debt? But when you're cash flow positive and you have a large, over $1 billion of cash and equivalents, that's really good, and it's strong for the balance sheet, and it helps out with just the operational growth. So I really love seeing that as well. All right, so there you have it, folks. There is some of the key highlights. Not quite sure how the stock's going to close today or what's going to happen over the coming days. Again, I'm not a swing trader. I'm a long-term investor with this company. So my opinion is, look, it wasn't the greatest news for us today. That's putting it mildly, but still 100% believe that it's a great company, potentially a buying opportunity. Not saying that it might not dip from here. I really don't know. But I do believe that as this company continues to grow and take more and more market share within these verticals of iGaming, within online sports betting, within the world of crypto, across the globe, I really think it's going to be surprisingly good results over time. I don't know, again, within the coming quarters, because there's a lot of pressure on growth stocks. I said that earlier, but it's the truth. So, everyone's got to do your own due diligence and understand your own risk appetite about what you think. As for me, I'm a long-term investor in Paysafe. I'm going to make a lot of other videos with breaking news about Paysafe. So if you like it, again, please go ahead and like and subscribe to the channel, because there'll definitely be a lot of Paysafe and or Palantir videos, along with a bucket of other stocks that I really like. So that's what I think. I'm in it for the long run, holding for several years. This company is going to do great, in my opinion. And just as the months and quarters go by, I'm going to dollar cost average. I'm going to buy some this week. I'm going to buy some more in coming weeks and months. And that's my plan. That's what I at least intend to do, just being upfront with everybody out there. So I hope that we all, make some money on this stock in the long term. Hope that everyone can kind of not let the pressures of a bloody red day like today, don't let it get you down too much. We're in this together. It's going to be a great stock in the long run. That's what I personally think. So, hey, everybody out there, thank you so much for watching all the way through to the end for another video. I'm Justin Daniel Finance. I am Justin Daniel. You all are awesome. Thanks so much for tuning in, and enjoy the rest of your day. And until next time, take care.